Most people think their property tax bill is just their property tax bill. The county sends it, you open it up, you get irritated, then you pay it. But that's where people might be making a very expensive mistake, because there might be things on that bill you're paying that you do not legally have to pay. I'm not talking about being scammed. I'm not talking about some crazy loophole either. I'm talking about exemptions, freezes, credits, deferrals, and reductions that may already exist in your state or county. Maybe you didn't know that you had to apply for them. Maybe you didn't even know they existed. And if you're over 65, disabled, a veteran, a surviving spouse, or you're helping a parent who owns a home, I want you to stop before you pay your next property tax bill and ask a few questions. Maybe you save some money, maybe you get nothing, but you've got nothing to lose. Now, I'm not talking about a federal rule. There's no IRS form for this. All right, state and local taxes are actually a thing. The SALT deduction is a thing. Using entities to get more deduction called PTED is a thing, but that's not what I'm talking about today. Today we're talking about the good old-fashioned property taxes that you pay on your properties. Property taxes that are local. This means the rules change by the state, by the county, by the city. Even school districts can change the rates. And there's really 5 areas I'm going to talk about. I'll throw in a couple bonuses at the end too that might be worth pursuing to save you some more money. Now, I'm not telling you everyone watching gets all 5 of these. You may not get any of them, but I would much rather you make one phone call and find out, hey, I don't qualify for anything, than overpay for the next 10 years because nobody told you what to ask. And that is the whole point of this video. You do not have to know the answers. You just have to know the right questions to ask. Your local government, your county, it's not going to organize your financial life for you. They may know your address. They may even know what your house is worth. They may assess it for something. But that does not mean the right exemption is sitting on your bill. They might not know what your age is. They may not even know that you're eligible for a bunch of exemptions. So in most cases, you're going to have to ask for it. And if you don't, the tax bill just keeps coming, just keeps increasing, and you might not even owe that money. Not kidding. A bunch of you are going to find out that you were exempt, or that increases that you had should have been frozen. And so there's really, I want you to ask 5 things. I want you to check before you pay another tax bill. By the way, my name is Toby Mathis. I'm a tax attorney who helps people with my YouTube channel. Number 1, Homestead. Now, you guys know I talk a lot about asset protection, so you're probably thinking, Homestead, that's the exclusion a creditor can't take. That's not what I'm talking about. This is a homestead exemption. This is the starting point. In many places, this is like a gatekeeper. A homestead exemption is tied to your primary residence. Where I live in Nevada, for example, I get a better rate. It caps how much it can go up, my property tax bill, on my primary resident, not my rental, not a vacation home. It's the home you actually live in. What it usually does is remove part of the home's value from taxation, or it freezes things. Let's just use the value for example. Let's say your home is worth $400,000 and your state or your county gives you a $50,000 homestead exemption. They may tax you now as though your home is only worth $350,000 instead of the $400,000. I know. Some of you guys are going to say, so what? Property taxes on $50,000 is chump change. But it can add up. It can be real money. And it depends on who you are. In some states, this is automatic. Like they just automatically do it. Is this your primary? Yes. Boom. In others, it's not. Sometimes you have to file once and it's just automatic. And sometimes you actually have to renew these. Sometimes you have to update it if your situation changes. In fact, this morning as I record this, there was a Supreme Court decision that came out where a property tax, somebody passed, there was a $2,000 tax increase that didn't even show up on their bill. The county foreclosed on their house, took a house that was worth $200,000 over a $2,000 bill. Of course, they fire sold it. Less than 80 grand is what they managed to sell it for. And immediately the person who bought it resold it a short time later for almost 200 grand. Well, here's the taxpayer, $2,000 ended up costing them a $200,000 home. But here's why this really matters so much. Before you can even get a senior exemption or a freeze or a disabled veteran exemption or some other reduction, the county may first want to see that this is a primary residence and that the homestead exemption is properly on file. So the first question you should ask is not, can I lower my taxes? The question is my homestead exemption, is it required to get the exemption, and is it on file for my property? That's really the question. Homestead. The answer is not ask, what form do I need? What's the deadline? Can this apply to the tax year? And if I missed it, is there retroactive relief? Because, again, the answers might be no, but you still ask, because this is where people mess up. They assume stuff is automatic. They assume the title company handled it. They assume the mortgage company handled it. They assume that somehow the county just knows. Don't assume things. Just verify it. I'll use an example. Texas, for example. The exemption applications are generally filed with the county appraisal district, and the numbers can actually be meaningful. Texas has increased its the school district exemption, for example, and that's the homestead exemption. And there are also additional benefits for seniors, disabled homeowners. But I don't want you to get hung up on just like Texas. I'm just using Texas as an example. The point is not Texas. The point is, check your county where you live. Make sure the basic homestead exemption is on file. That is number one. Number two, age-based. This can be seniors. This can be senior citizens or folks over a certain age. And this is where people tend to leave a lot of money on the table. Many places have additional exemptions once you hit, let's just say 65, and it's going to vary, but let's just say 65 is a popular one. Don't assume it's just going to happen, that somehow they're going to know. Sometimes there's an application. Sometimes there's even an income limit on it. Sometimes the state offers an exemption. Sometimes a county offers it. Sometimes a city offers it. You're like, there's these different levels. And like I said, sometimes the school district offers it. And sometimes one taxing authority gives it to you while another does not. And that is why your question has to be specific. Don't just say, hey, do I get a senior discount? Ask, does this county, city, or school district offer an age 65 or over or a senior property tax exemption? And what are the exact eligibility rules? Then ask follow-up questions. Are there any income limitations? Does my Social Security count towards this? Is it based on my household income? Do I have to renew this every year? Does it apply to the whole bill or just part of the bill? And that one matters because the property tax is usually not just one tax. It's a stack of taxes. I just went through them, right? County, city, school district, fire district, special districts. One exemption may apply to one piece of the bill and not another. And that's why people sometimes get confused. They hear senior exemption and think, great, my property tax bill disappears. Usually, that is not what happens. But that does not mean it's not valuable. If you're on a fixed income, a few $100s can really matter. A few $1,000s really matters to some folks. And if it repeats every year, that is not a one-time saving. That is permanent improvement to your cash flow for as long as you qualify. I'll use an example. Let's say New York. Local governments can reduce the taxable assessment for qualifying seniors. And some of these programs can be very meaningful for lower income retirees. Again, don't memorize New York's rule and say this is everywhere. Just memorize the question. Is there a senior exemption where I live? What do I need to do to claim it? Number 3, let's talk about freezes. These are assessment freezes, tax ceilings, and this one can be huge. And it's probably the most misunderstood because the word freeze does not mean the same thing everywhere. In one place, a freeze might be on the assessed value. Another place, like where I live, it might be a cap on the increase in your bill. In another, it might only apply to school taxes. In another, it may refund increases over a base year. And in a lot of places, there's no freeze at all. So don't assume it exists, ask. And here's why it matters. You bought your house 25 years ago, you paid the mortgage, you stayed in the neighborhood, you did everything right. But the neighborhoods, like a lot of times they do, they get hot. And that house that used to be worth $250,000 is now worth $1 million, and the county reassesses it. And now you're being taxed just like you bought the house yesterday, but your income didn't double. Your Social Security sure as heck didn't double. Your pension didn't double, only the assessed value of your home, which means nothing to most of you, right? Only that went up. And this is where assessment freezes or tax ceilings can actually matter. It may limit how much of that increase hits your bill, but you need to know exactly what's being frozen. So here's the question. Is there a senior assessment freeze, a senior tax ceiling, or a property tax freeze in this jurisdiction? And then ask, what exactly is frozen? Is it the value of the property? Is it the tax bill? Is it just one type of tax, like maybe school taxes? Are they county taxes? Are there any income limits? Do I need to file this every year? If I did and I missed the deadline, can I still apply going forward? And that last question, that's pretty important. You may not be able to fix the past. You may not be able to get a refund for the last 5 years, but you may be able to stop the bleeding going forward. And that is still pretty valuable. I see people do this all the time with taxes. They say, well, I already missed it, so why bother now? Because you're going to keep living, that's why. And you're going to be in that house for another 10, 15, 20 years. You may as well fix the issue now, save the money now, because it's going to mean a lot going forward. All right, number 4. I'm going to call this a circuit breaker. Circuit breaker. It's really like property tax credit. Circuit breaker just kind of sounds funky. Circuit breaker sounds like something you do in your garage, but in tax language, it usually means this. If your property taxes are too high compared to your income, boom, circuit breaks. The state may give you a credit or refund. And this is especially important for retirees living on Social Security, pension, or maybe like a really modest retirement income. But here's the trap. This may not be a county program. This one might actually be a state program. So you can call your county assessor and say, do I have all my exemptions? And they might say yes, and they might be right. But you're still missing a state property tax credit. Sometimes these are claimed on a state income tax return because renters can qualify too because property taxes are effectively built into rent. You might even get it. You may not even have to own the home. Sometimes people miss the credit because they don't normally file a state income tax return. But so don't stop just at the county. Search your state's tax department or revenue department. Ask your accountant. Use phrases like property tax credit, senior property tax credit, circuit breaker, property tax credit, homestead credit, then add your state, Michigan property tax credit, Minnesota circuit breaker, New York real property tax credit, Missouri property tax credit. Whatever state you're in, just check. Ask your accountant, Google it, use ChatGPT or any of these, right? Just start digging. It doesn't mean that they're right. You could always check it. And again, I'm not saying you're going to qualify for all these. You might not. But a lot of people never know the categories even exist, and they didn't know they were supposed to ask. And they think property tax relief only happens on the tax bill itself. It's not always. Sometimes it's on your state return. Sometimes the relief later comes as a tax credit or a refund. So you got to be digging. Number 5, property tax deferral. This also could be called a postponement, but you just kind of want to be careful with this one because it doesn't mean it goes away. It's not forgiveness. This isn't free money. This is a postponement, which means the government lets you delay paying the property tax and the unpaid amount essentially becomes a lien against the property. Has to be repaid later, often when you sell the house, maybe when you refinance, or if it's transferred, or when you pass away. It's just basically like it's secured. So say this part out loud. This isn't a forgiveness. It is secured by a lien. It must be repaid. And that is the part that people need to understand. For the right person, under the right circumstances, this can be a lifesaver. For the wrong person, this could create a surprise for their heirs. This is most useful for folks that are what we call house rich and cash poor. Right? Think about a widow living off of in a paid off home worth $600,000, but she's living on, $2,500 a month. The house has value, but the property tax bill is literally eating her alive. And she does not want to sell the house, but she also doesn't want to move because there's all sorts of costs to that. Maybe she raised her kids in the house. Maybe she wants to keep it in the family. A deferral or a postponement program may allow her to stay in the home without writing a property tax check every year, but it's not gone. It's delayed. California, for example, has a property tax postponement program for eligible seniors, blind homeowners, disabled homeowners, but it has requirements, including income and equity rules, and the postponement taxes they're secured by a lien against the property that eventually must be repaired or repaid. So this is a tool. It's not a gift, and tools can help or hurt depending on how they're used. So here are the questions. We just went through 5. Does my state have property tax deferral or postponement programs? What age qualifies? Is there an income limit? How much equity do I need? Again, because if it's a deferral, they get a lien. If the house is underwater, they're probably not going to do it. What interest rate applies to it? When does it have to be repaid? That might be a big one you want to ask. And if I have a mortgage, will this create a problem with the lender? Check that last one right before you do anything, because you don't want your mortgage getting sideways with you. If the mortgage agreement requires that your property taxes stay current, you need to know whether you can actually do a deferral program, whether that's going to be acceptable to the lender. Now, so we just went through 1, 2, 3, 4, 5 big categories. But I have some bonuses, because there's others. But right now, as you sit there, write in the comments which ones you are currently getting where you live. Write down where you live and what exemptions and what you have found if you've taken advantage of some of these. I promise you, it will help others to see what you are doing in the comments. So just write in the comments and feel good knowing that you're helping someone. Say, hey, I live here. Here's a bunch of things that I'm getting. Here's how I got it. I know you guys are out there doing it. I read comments on my videos all the time. A lot of you guys are really, really, really smart, and they're like, this is what I did. Please put that in the comments down below. What exemptions, what are the freezes in your area? Just tell people where you're at. You can even put the county, because somebody might be, your neighbor, might be a few roads down that did not realize it was there and be like, wow. But let's talk about bonuses. There are also 3 bonus exemptions I want you to think about. And these are big ones. Bonus number 1, disabled veteran exemptions. I'll just write bonuses. Boop, boop. I always try to make my A's funny. If you served in the military or you're helping a parent who served, then check this one out. In some cases, even spouses of disabled veterans get benefits. Disabled veteran exemptions can be some of the most valuable property tax benefits available. In some states, if you have a high enough, what they call a service-connected disability, it can wipe out a big part of your property tax bill. In some cases, it could wipe out the whole thing on a primary residence. I think there's like 22 states that offer massive savings to disabled veterans. Texas and Florida immediately come to mind, but there's others. But the rules vary dramatically. Some states use a disability percentage. Some might require 100% disability. Some offer partial exemptions, some don't. So the question that you're going to ask is, does this state or county offer a disabled veteran property tax exemption? What is the rating? What VA rating is required? And can it transfer to a surviving spouse? Don't assume this stuff. Ask. Speaking of that, bonus number 2, surviving spouse continuation. I'll just write survivor. This one gets missed a lot of times. Spouse passes away, the family's grieving, there's Social Security that you have to deal with, there's bank accounts, insurance, maybe you have probate, hopefully you have a trust, and nobody thinks about the property tax exemption. But when one spouse dies, the exemptions may not automatically continue. The surviving spouse may also need to apply. There might be deadlines and there might be age rules. There might be occupancy rules, and if nobody files, the property tax bill can jump at the worst possible time. Right after the household, it loses a spouse, and you lost income, and then boom, you get hit with this. So if you're helping a parent after the first spouse passes, put this on your checklist. Review the property tax exemptions. Don't assume they carry over. Call and ask which exemptions were on the property. Do they continue for the surviving spouse? Does the surviving spouse need to reapply? What is the deadline? That one step may save a surviving spouse thousands of dollars just to do this and go through and ask those questions. All right, bonus number 3. I was thinking my dad on this one. I believe he was in New Orleans. My parents lived there when they were really young, and they got this huge property tax assessment. So he goes down to appeal the assessment. He said, hey, it's obviously too high. It was like ginormous. And he said it was great. They met him, and they said, hey, I just want you to remember come voting season how we helped you here. And it was like, I think they were doing it systematically. All right, but every property tax bill starts with a value. And sometimes that value could be wrong. They may have the wrong square footage. They may have the condition of the property wrong. They may have its classification wrong, and they may be using bad comparable sales. They may not know that your roof is shot. They may not know that the house is really in disrepair. It needs a lot of work. They may not know that the house down the street sold for less and is actually a better property. Most places have some sort of process to challenge or appeal the assessed value, but it's usually a pretty short window, as low as like 30 days when you get a notice. So when that assessment notice comes, don't just throw it in the drawer. Take a look at it, check the value, check the square footage, check whether your exemptions are listed, check whether the property is classified correctly, and do a little bit of Googling. Look for comparable sales. You may not win, but if you don't appeal, you definitely don't win. Now, we just went through a lot. Let me give you the 5 questions again. These are the questions I want you to write down. Number 1, is my homestead exemption on file? Number 2, is there an age 65 or some sort of senior exemption? Number 3, is there a senior assessment freeze, a tax ceiling, a property tax fees? What are the conditions? How do you apply? Number 4, does my state offer circuit breaker homestead credit or some senior property tax credit? Number 5, is there a deferral or postponement program, and is it a lien that must be repaid? And if you're a disabled veteran, if you're just a veteran, if you're widowed, or you're helping a surviving parent, ask about those separately. Ask the specific question, write down who you spoke to, write down where the form is if you have to fill it out. If you have to fill it out, write down the deadline. Ask whether it applies retroactively or just going forward. And if the person on the phone sounds unsure, call again, because this stuff is really local, and even the people answering the phone are sometimes dealing with dozens of different programs. It gets confusing. The bottom line, though, is simple. Property tax relief isn't automatic. You might get nothing. You might find out that you save some money, but the cost is almost nothing. Not finding out can cost you for many, many years. I don't want to be 10, 20 years down the road, realizing I paid something that I didn't have to pay. So if you have a parent, a grandparent, a neighbor, maybe it's a vet that you know, maybe a surviving spouse of somebody or a friend who owns a home, and they may not know this stuff exists, send them this video. They might not qualify for a thing, but if they do qualify, you may be the reason they stop overpaying. Hey, maybe they'll take you to lunch or dinner. And sometimes that's not just a few dollars. That can add up. Sometimes that's the difference between somebody staying in the house they raised their kids in. Maybe it's the difference between them having to sell it. They're forced to sell because the property taxes keep going up. We've all seen those stories. The property tax rules are state and local, and they change. So before you rely on anything, check your county assessor, your appraisal district, your treasurer, your state revenue department. Talk to your accountant. Talk to other people in your community. But do check, because the worst answer you get is, no, we don't have that here. The worst mistake you can make is never even asking. And by the way, if you like this type of content, don't worry, I've done over 1,000 videos on stuff like this. So dig on in, save a bunch, subscribe and learn something new each week. The fun is saving money. Catch you later.